Hi, I'm John Napolitano, the CEO of U.S. Wealth Management and Braintree. You know, any investor that doesn't talk about errors that they made is either fibbing or not paying attention too closely. All investors make errors. The key is to learn from your mistakes and to correct short-term mistakes regularly so errors don't become long-term problems. One I see frequently is picking an investment and never looking at it again. This is not a set it and forget it exercise. You need to ask yourself questions like, does that investment still fit? Does it still meet your expectations? Did it meet your expectations in the prior year or years? And how is it held up against its peer group? Another mistake I see frequently is chasing last year's winners. Now, we all pay attention to the market news and want to be a part of what seems to be working well and avoid what's not working well. And in fact, in some cases, asset classes have gone from worst to first and vice versa from year to year, kind of just like the Red Sox. Another issue, overlap. Overlap means that you own a lot of the same type of investment. It doesn't have the same name, it doesn't feel the same or look the same to you, but if you investigate those companies under the hood, they're all doing the same thing. And many times, not always, many times companies do the same thing, kind of move in lockstep, up and down with market sentiment. Another issue I see frequently is letting the tax tail wag the dog. This is a problem for many high bracket taxpayers. We see all the time large gains. People don't want to pay the 20 or 23.8% federal capital gains tax rate, only to see that investment plunge. Wish that they had later sold it. So sell based on when it's time to sell, and don't let taxes drive that decision. Next, understand the risks associated with your investments. Not knowing what the risks are is a very common error. You know, time heals everything. Today, for example, the U.S. markets are again reaching all-time highs. The average investor is rapidly forgetting about their losses of 2008 and just diving right in. So know your risk, evaluate it regularly, and make sure it sits well with you in all conditions.